Thank you, Kamali. Very good afternoon to you and to viewers at home. This is Business Live with me, Darren McCaffrey. I want to stay on the economic theme and those GDP figures and Britain's growth prospects in the months and years to come by starting by talking about what the Governor of the Bank of England, Andrew Bailey, had to say last night when he avoided making his thoughts on Brexit public, but did go as far as to say that effectively the Brexit had done damage to the economy, and he urged the government to rebuild relations with the European Union. Let's have a listen in.
Now, I've said many times as a public official, I take no position on Brexit per se, and that's very important. But I do have to point out consequences. The changing trading relationship with the EU has weighed on the level of potential supply. The impact on trade seems to be more in goods than services, which I don't think is particularly surprising. But it underlines why we must be alert to and welcome opportunities to rebuild relations while respecting that very important decision of the British people.
So, not to reopen old wounds, or maybe we mean to reopen old wounds. Let's speak to two men about Brexit, about what Britain should do in its relationship with the European Union. Let's speak to Professor Stephen Millard. He's Deputy Director for Macroeconomics at the National Institute of Economic and Social Research, formerly an analyst at the Bank of England, and Julian Jessop, an economist who also worked at the Treasury. Very good afternoon to both of you, gentlemen. Julian, let's start with you. Yeah. Just on a factual basis, Andrew Bailey's right, isn't he?
Well, I think there is probably some common ground here. I think that most economists would agree that trade openness is important for productivity. And if you increase trade barriers through non-tariff barriers in the case of our new deal with the EU, then you're probably going to get less trade than you would otherwise have done. So there's certainly a potential hit here. But where I start to disagree, first of all, is on the size of the hit. There's actually very little hard evidence of a significant hit even to trade openness in the UK. We basically continued to track France over the last several years. And also, if we were to improve our relations with the EU, of course, it depends exactly what that means, but there's a risk then that we end up tying ourselves ever more closely to an economic bloc that is weakening, and we lose the opportunity to gain some of the benefits of Brexit in terms of doing new trade deals with other countries, but also smarter regulation at home, including some of the things that the Governor was talking about last night, such as financial services and AI.
Stephen?
Yeah. Well, I disagree a little bit with Julian. I think there is some evidence that we've already seen an effect on GDP. It's lower now, I think, than it would have been had it not been for Brexit. You can argue about the numbers, that's for sure. I think trade has certainly been affected. Speak to pretty much any business and they'll tell you that their costs of trading with the EU have risen, and that has affected their ability to trade. I mean, Julian is absolutely right. The key point is, what does this getting closer to Europe mean? Does it mean that we're going to completely synchronize regulations, etc., in a way that would stop us making trade deals with other countries across the world? Or does it mean that we will just try and see where there are areas of common ground already and in the regulation that we want to see in both areas, and just apply them and get closer in those particular areas? So I think the devil is going to be in the detail, as they always say.
Julian, do you accept we've got we will have a new president, a returning president in the White House in a couple of months' time? He may well slap pretty punitive tariffs on the UK. We may not, that special relationship may not count. And in many ways, if we want to succeed, if we want to see economic growth, it is going to mean trying to rebuild or reshape our relationship with the European Union, surely.
Well, at the risk of using an appalling pun, I think there are trade-offs here, and I think it's important to be aware of them. So yes, moving closer to the European Union might help in some ways. As it happens, I think there has been a hit to the economy over the last few years, but it's mainly come through investment rather than trade. So the increase in business uncertainty has prevented some companies from investing here. But even the OBR admits that hit is going to be temporary. In terms of our relations with the US, well, again, there are risks and opportunities on both sides. Some people are saying that the re-election of Donald Trump means we should move closer to Europe. But I think the only thing that would guarantee is that we end up being hit by exactly the same tariffs that he might oppose on the EU. Whereas if we're outside, at least there's a chance of us doing a separate independent trade deal. And also, many European economies will be hit much harder than us by Trump's tariffs, particularly economies like Germany. So again, by becoming closer to the EU, we risk tying ourselves into an economy that's weakening, rather than moving closer to one like the US, which is at the forefront of lots of the things that we need to be leading in as well, such as AI and financial services.
And Stephen, isn't that it really, that actually one of the reasons people would argue Brexit has not succeeded, even in the way that Brexiteers would have wanted, is that the UK just simply hasn't taken advantage. I mean, we've been out for years and we've not really diverged or innovated enough to take advantage of the Brexit freedoms.
Well, I think that Julian is certainly right in that there was a lot of uncertainty around Brexit. It took quite a few years until we actually knew what Brexit effectively meant, what the final agreement would look like. But having said that, it's not clear that the advantages that people were talking about were ever as great as they were suggesting. I mean, with the best will in the world, a good trade deal with Australia and New Zealand, given they're literally over the other side of the world, is not going to make up that much of what you lose by being less able to trade with your nearest, the countries that are nearest to us, i.e. the European Union.
Well, it's going to be a fascinating couple of years where the UK turns next, particularly if those tariffs do get imposed on us by a Trump administration. Stephen and Julian, thank you so much indeed for your time this afternoon. Brexit, the age-old argument that will, I suspect, never really go away. Now, there's been a lot of doom and gloom, hasn't there, around hospitality recently, with pub and restaurant bosses warning the Chancellor of business closures to come over the next year. And that has made chefs hit out at what they call cheap diners who are now splitting bills and asking for tap water. But one restaurant owner who should be happy today is Natty Crutchfield, whose restaurant Natty's Jerk in Portsmouth has just been named the winner of Uber Eats Restaurant of the Year. So let's bring in Natty and talk to him now. First of all, congratulations. What does winning an award like this mean for you and your business?
It's unbelievable, to be honest. It means everything. It's recognition of the hard work. We're a family business, so it's a recognition, and I think it allows us to, to believe that we can go further and grow further. And it's for, I guess, as an independent business as well, it shows that there is strength in independent businesses, especially in the tough economic time that we have. And the support from places like Uber I guess it allows us to, I don't know, it's unbelievable. It's a great opportunity and a great thing that happened to us.
And isn't it a recognition, Natty, as well, that, let's be frank about this, takeaway is a big part now of the restaurant experience, if you like, for lots of customers? Because this is an Uber Eats award, isn't it?
It is. It's an Uber Eats award. It was done on presentation of your food that you're eating and the quality of food, etc. But you are right. Takeaway is a massive part. It's probably, for us, it's about 30% of our business. But it also, for me, allows me to, through things like takeaway, it allows me to market my in-house as well. So I look at it as a way of marketing as a restaurant. We believe we're an experience. We offer an experience, and it gets into people's homes for us to kind of woo them out and give them an experience and come in and enjoy themselves.
Yeah, it's almost as if it's a tease, isn't it, if you like?
It is. Yeah, that's exactly it, yeah.
You talked there, didn't you, about the pressures that businesses are facing at the moment. What was your reaction to the budget when you heard about, those tax increases and the minimum wage going up?
It scared me. The truth is, it scared me, and but I always try as a person to find or look for what the positives are, I guess. And I've been searching around for them, and I've listened to people. It's going to happen. I guess we're in a position as a business that, as a family business, and anyone that we employ, I think we've got 30 odd members of staff that we pay above minimum wage anyway. So that's going to happen. I mean, the NI is going to be is going to hurt, but I think what we need to continue, and I've said to my whole team, is make sure that we give customers that ultimate experience, that they keep coming back, so we can manage what's about to happen. So we need to grow revenue rather than cut costs, and I guess just make an experience that we can get through these times, and it would just become the norm.
Yeah.
Everything would just become the norm.
And just very finally, Nat, I don't know if you saw some restaurateurs here in London have been complaining about diners coming in, only having one course, drinking tap water, not spending money, if you like. Have you found that? And is it annoying?
You know, the truth is, for us, it's actually gone. We're a kind of middle thing. I don't know how to describe it. And we've only just recently moved to table service. So we kind of survived on that person having one drink and one main course. And actually, with an experience of moving to table service in our restaurants, we've actually noticed the opposite. So again, I think for me, it just means that for us, and I can't talk for everyone, we're all in a different place. I think that it again comes down to giving the diners the quality and the experience and the quality, so that they can spend that extra money and they think it's worth it. So, I mean, I'm looking at it positive.
Good.
Because,
that's the only way you can do it sometimes. Natty, from Natty's Joke there in Portsmouth, thank you so much indeed for joining us.
Thank you. Take care.
Right, let's have a look at the markets on this Friday and how they've fared. The FTSE has closed down just a tiny bit following those disappointing GDP figures. Not really much in it, though. Weighed down, though, by some big pharma companies, AstraZeneca and GSK, both down on the news of Donald Trump having picked Robert F. Kennedy, of course, a vaccine skeptic, to be his health secretary. It has had a similar effect on stocks in Europe too. Things a bit flat across the main indices today. On Wall Street, stocks are ending the week in negative territory as the rally that followed Trump's win continues to fade, and hints from the Fed chair yesterday that he's going to be more cautious about interest rates. On the currencies, the pound is down again today against the dollar. It's been down quite a lot over the last 10 days or so to $1.26, and also down a fraction against the euro. And with the oil, Brent crude is back at just under $72 a barrel. Let's bring in Daniela Hawthorne. She's a senior market analyst at Capital.com. Daniela, good afternoon to you. Let's start with pharma, if we can. And you know what? A big hit to AstraZeneca and GSK today.
Yeah, I mean, there are big concerns in the industry what this nomination might mean for the industry. We know he's a big skeptic on vaccines, and he's endorsed a lot of conspiracy theories in the past, medical related. And of course, we don't know what it means right now and what effects his policies will have. And Trump has sold this as his attempt to break down on a lot of harmful substances in the pharma industry, in the food industry. He wants to move schools away from processed food, and all of that seems great on paper, but we really just don't know what it means yet. And it's definitely scared investors with those big pharma companies down, weighing on those big indices, not only in the US, but also in the UK and Europe. So right now, it just means uncertainty, and we know that's never good.
Daniela, the pound sterling is down again today. In part, that's been because of a strengthening dollar, but also clearly today's GDP figures will have weighed a little as well.
Yeah, interestingly enough, this morning when the data first came out, we didn't really see a massive reaction. And I think a lot of that having to do because we did see the Bank of England in the last meeting actually saying that they expect the new government's tax plans to actually increase GDP by 75 percentage points in the next year. So clearly we saw markets really not taking that negative reading in stride, but it has worsened as the day has gone on. As you're saying, down against the dollar because of that Trump effect, but it's been significantly down against the Japanese yen and the euro as well. So markets clearly catching up to that. And I think now, especially since the Bank of England rate cut in December seems to be off the table, only about 18% chance priced in now that we get a cut. It's this balance of growth and inflation and how will the economy survive?
And just finally, Daniela, and briefly if we can, it does seem the sugar rush almost of those highs, particularly in the US in terms of the stock market after the Trump win, has worn off a little.
I mean, not a surprise, you know, we see this post-election euphoria kind of start to die down. And until yesterday, a lot of the pause that we'd seen in US indices was just that, a pause. Now, the real sell-off has started today. And I think that's been exacerbated not only by the Trump effect dying down, but also, as you were saying earlier, Jerome Powell yesterday pushing back on his need to really start cutting. But also we've seen Susan Collins from the Boston Fed saying that she's not taking rate cuts off the table. Now, essentially what that implies is that no cutting is actually on the table. And I think that's where investors get spooked and they're like, we could not see a cut in December. Where does that mean the terminal rates end up next year? Because they've been going higher and higher. And we know from the data this week, core inflation in the US still significantly high. Inflation has stopped dropping. That's too high for the Fed to be comfortable, specifically in wages. And now investors just don't know what's going to happen. And again, that uncertainty with everything going on is weighing on these indices.
Really good stuff. Daniela Haythorne, as always, thank you so much indeed for joining us this afternoon on Business Live. Thank you, Daniela. OK, before we go, a bit of Christmas cheer. I know it's mid-November, but it is also key Santa training season. That's when those Father Christmases we see in our shopping centres and shops get picked and trained for the busiest retail period of the year. Well, I've been speaking to James Lovell, who is I think it's fair to say, the country's chief Santa trainer. And I found out that Santa wouldn't be half as effective if it wasn't for his elves too.
An elf is like your private detective. She'll find out salient facts like a child's name, a child's age, maybe what they want for Christmas, and be able to tell Santa, just tip him off, just to remind him. Obviously, Santa knows, because he knows what everybody wants for Christmas, but he occasionally needs reminding. And the elf will remind him so that when the child comes in, Santa can say, "Hello, George, how lovely to see you again," and we'll know what they want for Christmas, which is very important.
OK, and James, if this all goes awry, if I've got a chance to be a father, what's the best? Teach me a lesson, I suppose. What's important?
Well, I'd like you to be jolly. You might need a bit of padding, which is good. It's a sad time when I have to tell somebody they don't need padding anymore, but lucky for you, you do need padding. You need to hugely improve your beard and moustache, I'm afraid. If we put you in a good costume and we gave you a good beard, you're jolly. That's the main thing. That's great. But let's start with the basics. Give me a ho, ho, ho. After 3, I'm going to ask you to say ho, ho, ho. We'll see how you match up, and then I might get the real one behind me to give it a go too. So after 3, here we go. 1, 2, 3.
Ho, ho, ho.
Very good. That was funny because it just blew off mid ho, ho, ho. Now, let's hear how the pros do it. Father Christmas, after 3. 1, 2, 3. There you go. Merry Christmas to one and all.
Yeah, I definitely think I should stick to the day job, to be frank. That is it for me on Business Live for this afternoon. We're back, of course, on Monday morning at 11:30. Do join me for that. Up next, though, it is the News Hour with Jonathan Samuels with the very latest news. That's coming up at 5 o'clock. But from me for now, thanks for watching and have a nice weekend. Goodbye.